how much is the demand from your investors to get more into AI data center, to get more into compute and the way in which you finance it?
First, thank you again for having me. I always love to come on the show. We like you said, we had our 20-year investor day yesterday. And just to take you into the room, I think we had 6 different companies present on 6 different industries. Everything from healthcare finance to restaurant finance, and then, like you said, AI infrastructure and our newest investments in energy. And for us, the way we invest, the formula has always been the same. It's really by being value added to our portfolio companies. And
so how are you value added to a CoreWeave? How are you thinking about financing the GPU, the compute they need to go out and buy to fill their data centers, for example?
That's right. So for us, it's really about thinking about the asset first, right? Understanding the value of that asset, understanding the customer contracts, and then helping the companies unlock value from there. But I think what AI infrastructure, we talked about it a reasonable amount yesterday, and it really comes down to 3 things. It's skill, it's scale, and it's scarcity. So I'll start with scale. When we started investing in CoreWeave, we were talking about 100 GPU clusters, and we thought that was going to be difficult. Now they're putting in 100,000 GPU into clusters, and they're going to do million GPU into clusters. And so the scale is just massive.
Yeah.
Right? Then you go to the skill, and what you can compare it to is it's like an F1 car instead of your family sedan. This is really, really hard to do.
Okay.
So companies like CoreWeave, they're one of the few in the world that can actually do this. And then to your question is the scarcity. People say there's not enough GPUs and not enough power, but the issue is the demand. The demand is just off the charts today. Every company we talk to, our entire channel check just says everyone needs more GPUs.
David, can we talk about how Magnetar muscles in on any project? The headlines that cross the Bloomberg on a weekly basis at the moment are about the great scale AI neo-cloud infrastructure projects, but you have legacy finance coming in hard, strategic partners, because the size of the check to get the project off the ground is getting bigger and bigger and bigger.
That's right, and it's a great question. A lot of the capital that's come into private credit has been this one-size-fits-all. Let's make sure the mandate fits into insurance company type of money. That's just not what we do. What we do is we go in and we want to be value-added to partners and help unlock value. So we want to sit with management teams and talk about how to lower their cost of capital over time, and that's why they bring in a Magnetar.
David, where and what is the next CoreWeave for you?
For us, it's a diversified portfolio approach. So we're always thinking about downside first. So we're going to look at the assets and contracts, but then it's how do we help unlock value? And so even yesterday, a Taurus Energy, a TensorWave, these are the companies that are up and coming right now. And they spoke very eloquently about their businesses yesterday.
David, is there an opportunity for you, and are you literally going to participate in what was announced from the United Kingdom this week, all the heavy infrastructure investment from America's biggest technology companies?
For us, we're looking across all projects. And again, if we're not really value added and helping lower the cost of capital, that's not where our skill set lies best. And so for us, it's really getting involved with management and helping them make decisions given the data that we have inside of our firm.
There's almost a CoreWeave just launched in the UK, Nscale. I mean, again, a crypto miner that pivots into compute. Are they the sort of companies that are interesting?
Sure. I remember having dinner with Nscale, call it 6 months ago in Chicago at Morton's. That's right. Those are exactly the type of companies that are interesting. And for us, we have to really make sure that we're thinking about our capital and we're thinking about our investors and making the appropriate allocations.
Just for our audience that is savvy on financing and is savvy on AI data centers, how do you lower the cost of financing?
So it's really about the customer mix and the asset mix. And so we're really trying to think about, how we take a customer mix. So if you have all non-investment grade customers, that's a much more difficult portfolio to finance. Now, you want to have non-investment customers because they grow very quickly. So now we have to think about the mix of customers underlying your portfolio and help you make those allocation decisions. I think that's how we can get involved with the companies themselves. We can be value added and really unlock value for them over time.